Good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you'd please type the number 1 in the chat box, let me know that you can. I would greatly appreciate it. Keep in mind that I do not really look at the Q&A. So if you could do it in the chat, that would be great. All right. Thank you. There, HF. Let me get video started here. Morning, Helen. Jim, good afternoon. Hey, John, afternoon to you as well. Lots of ones, lots of crazy things too, but H pattern review, I like it. Yeah, there we go. That's the pattern that we're going to talk today for sure. But well, welcome everybody. Hope it's been, I got the camera on, but I don't have the lens open. There we go. That's a mo better. In the infamous words of my wood/metal shop teacher, Mr. Schwartz, that's a much mo better. I hope you're having a great day. I hope it's been a good trading day for you so far up to this point. As we do get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like here today, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. Now, there's a lot happening right now, at Wealth Builders, a lot going on, but nothing more important to me anyway. Then she said yes. My youngest daughter got engaged yesterday. So we now have 2 engaged daughters. And we only have 2, but they're both engaged at the same time right now. So this was pretty cool. She went down to Savannah, Georgia with her sister to hang out with their cousin. And her fiance now, her boyfriend, flew down to ask her hand in marriage after he came to us first to ask. So we're stoked. We've had to keep it under wraps for a whole day. We couldn't tell our parents because she needed time to assimilate and get herself all ready and situated, and started calling people yesterday. And she just put her first post up on social media. So she said, go. And 4 seconds later, I had mine ready to rock. I just shot it out there. So appreciate all of the thoughts. But listen, I tell everybody all the time, to me, I look at it as a family. That's what a lot of you are. I've known so many of you so long. And I like a lot of you a lot more than some of my own family, realistically. But that will be a whole different conversation for a whole different day. But other things going on. We've got Inner Circle happening this week, 22nd, which is tonight. We had a great Inner Circle Friday, Saturday class, our core training. Wow. We had someone who's progressed from Mastermind up into Inner Circle after his very first core training this week. Guys, it was a fantastic training. 8 hours, 8 full hours of fibs. I mean, just crazy. Mastermind group coming up on the 23rd. Covered Call Explorer is on the 25th, 29th, and that's the Q&A for Covered Call Explorer. 29th is Trading You and Monster Market Movers, May 1st. Power Hour Trading Coaches Playbook are on the regular schedule for this week. Yeah, 29 is not a holiday, right? Is it? I don't think so. I think next week we're good. Hidden Gems of the Chart, which is Mr. Tony Benson. Guys, do not miss out on that. Tony's going to rock your world with what he talks about with patterns and the likes, okay? Power Option Plays. So Mondays and Thursdays, I should be good on time this week, on days this week for that. I am traveling Wednesday, so I should have no problem with Thursday at all. E-mini Think Tank and Covered Call Explorer also on the regular schedule. Here's our followers page. Sean just shared with me today that we've got he hasn't put it on here yet. Lee, see if you could find out from Sean the name of the faceless TikTok, mindset TikTok that we've got out there, and let's go ahead and drop that in the chat box there. Make sure you follow on the various social platforms, guys. We put tons of stuff out day in and day out. Here's our Trading Boss Manifesto, what it means to be a trading boss. You can download this on wealthbuildershq.com. You can download this on robertjroy.com, and you can download this on tradinglikeaboss.com. Save your seat for the Hidden Gems of the Chart with Tony. Guys, I'm impressed with what he's been able to do here and what he's put together. So we're really looking forward to that. So there you go. Lee's just on the links, man. He's just getting them going for you. So you got a couple in there already. All right. Oh, I don't want to do that yet. So trade setups today. What trades did y'all do? Go ahead and drop them in the chat box before we get crazy here talking about this. What trades did you do? So let's see. Oh, I feel so bad for you, Trip. I really do. Only 54.5% on the IWM scalp this morning. Only 54.5%. These guys have, the inner circle is our highest coaching program. And that is reserved for those that know how to trade, right? If you are newer to trading, Mastermind is where you start. And we kind of walk you through this program. The inner circle has a 3 days a week, Monday, Tuesday, Friday. They do a live trading room where they're in the room together. Amelia's in there, Trip's in there. They're all hanging out. They're all talking about the trades that they're looking at, what's setting up, and so forth. And they could not be more excited about this. They're developing, this Hakanashi scalp. They're developing some other Hakanashi plays. Trip's working on a Hakanashi chicken trade. So I can't wait. Hakanashi earnings. I really can't wait to see them all come through. Let's see. John said $1,400 today. Wheel of Fortune on Lyft and Nike. Diagonal spread on DFS. Cash flow $1,400. Good job. Brenda said no trades today. $213 on SPY on Friday. Nice job, Brenda. Congrats on that. Right, guys. Look, today not a whole lot out there for me. I saw the gap up, and if we go look at an S&P 500 chart for now, let's pull it up. We're not going to really analyze it yet. Okay, so we pushed up this morning and then started to fail, right? We ran almost into that 500. Let me get my crosshair, just easier to see. We got it to a high of 49.96.70. So we got up near that 5,000 level, 500 on SPY, $5,000 level, right? And we've got a pivot point here at 416.96. Okay, 416.87, whatever it is, 416.82 is the exact number. And we push through it here. So what's happening on this candle here? Nothing's happening here because I do not believe at all the move to the upside. Well, this is Q, sorry. This is Q. Okay. So let's talk SPY first. So we got the gap up. I didn't trust the move up. I was not taking a trade on this. We had nothing we had nothing come down to a support level. By the time we came down over here, we're sitting at 1030. I just wasn't convinced we were going to get a bounce and a continuation move. We failed. I didn't take anything off of this. We did get back up above again, but nothing in here on SPY had driven me today to the, let's go take a move, right? On QQQ though, as I started to say, we got the gap up. Just keep enabling those lines. We got the gap up. We pushed higher, and all of this right here up to this candle at 10:05 a.m. I am in position number 1 in the chair, which means I am all the way back here, hands crossed, can't touch the keyboard, right? Nowhere near it, right? And I'm just watching. The next candle, just get my drawing tools. The next candle over. So this one here was the first one. The wick pierced through the pivot point. And I went from position number 1 in the chair to position number 2 in the chair, right? Now I'm focused and I'm watching. The next candle we pierced through. The third candle we closed below. The fourth candle we retested and failed. It wasn't a big move in there. We went from 416 down to 415.71 was the midpoint right in here. I think it's 415.79. 415.79 right in here. Half the trade taken off, and the other half of the trade ultimately was stopped out of as we came up. So it wasn't a big move today, but when you look again at S&P 500, we don't have a big candle today, right? The bulls are trying, right? They're pushing. Can we make it? I think I can. I don't think they can, but at least we haven't been able to push yet. I mean, we've started many days like this: gap up, gap up, gap up, or run. You know, we gap down a little bit, we run, get to a higher than we were on the close, and fail. Friday was perfect. We gapped down, we ran up higher than the previous day's close, and we failed on Friday. Today we gap up nicely. And if we can get above the 5,000 today on the SPX and stay there, I'd be tickled pink, right? Yeah, no, this is SPX. I'm not talking Qs here. I'm just looking at S&P. That was Jim. I appreciate that, Jim. Thank you. No, I'm purposely on S&P. But just based on overall market condition, I don't believe that we were going to get this giant move to the upside today, right? Things could change. You never know. Let's see. So Jim said, I listened to the Traders Market Intelligence report this weekend. You redrew the fibs on the S&P and you put back the 5,000 level. A 10% retracement on the S&P would be 47.38, 36. Would you put the line on your chart or leave it off? So there's a lot of controversy on that, on how we calculate that level. Some will tell you that it is the 52-week high that you're working off of. Others will tell you it's the all-time high that you're working off of. Whatever your choice is, whichever way you choose to go with it, the question that Jim has is a very valid one. Would you draw the line on the chart? And yes, if you look at the all-time high, because that is our 52-week high as well. But just FYI, in case you're looking at that and it's no longer, it may be a high, but it's the more recent high for the last 52 weeks. Then the all-time high, that's going to be important. You're going to work off of that. So yes, Jim, we would draw that down as a 10% down. We draw the 20% down from there. 10% gives us a pullback, 20% gives us a correction, and a 5% gives us a tickle, right? It went down enough that some people said, okay, I'm just going to buy. Right, but nothing to truly drive home that we had any sustainable results. You want some pain and some capitulation in there. We haven't seen that type of stuff happen in a bit, because it seems that people just are buying on the way down. It doesn't matter. It gets a slight bounce and they're jumping in, trying not to the FOMO, right? Not miss out on it. So yes, having that all-time high there and then taking 10 and 20% of it and snapping lines on the charts would be very important. And as Jim said, we did redraw fibs. I didn't do them on SPY. I need to. Meant to do it over the weekend and forgot. But on the S&P, we came down to January 17th and the high of March 21st. I know we had a higher high here, but I don't care. That was enough for pullback, long enough, sustainable, pull to a fib line, done. Good. I'm glad it was helpful on the retracement lines, Jim. Absolutely. By the way, we've got some kudos there for you, those of you that took your trades today. So I appreciate everybody's thoughts on those. Thank you. Excellent. Okay. So let's talk SPY. By the way, I meant to tell you that I probably have to, I'm just waiting. If I get a text come through, I'm going to have to finish early, but just a few minutes today, but only if I get a text message comes through on this. On myself, which is on mute, by the way. So I'm just looking for the green lights, right, for it to light up. So we talk S&P 500 now, of what's going on, what's the pattern looking like, where are we focused on for levels and the like. And this is part of what we go through in the Traders Market Intelligence report. So if you don't look at that, it comes out each and every Sunday, right? Somewhere in the afternoon time, Eastern time, each Sunday. As I said before, it is our highest opened email of every email that we send out. And this video is a big component of that. And by the way, this upcoming Friday, you're going to get a taste of Tony jumping back in and doing it, I believe, because I'm out of town. So I think Tony is the one that's going to step in and take advantage of that, take care of that for me and give you guys, you'll have the advantage of Tony's insights as to what he's thinking about, especially with he's got his upcoming charting classes coming up. So, excuse me. When we look at S&P 500, what in the world are we looking for? What do I see? What do I want to do? Where do I think we go? So a couple of things. Right now, good V bottom in here. We struggled, and when I say we struggled, I'll tell you why. Some of the top traders in this company, students, are in our inner circle. And we sat in inner circle for half hour, 40 minutes, I think, just discussing the places to draw a why versus why not. There was a big point of contention of, well, I like that one better versus this one. Why did you choose this one? And we went through 10 minutes alone just on the difference of these two as to the why, and came out with a consensus at the end of, yep, that was a better choice, right way to do it, right? So we got that V bottom over there. Again, you get this stair step pattern that took place. We got our pullback to the 51.96. We came down near the 236 right there. We broke through, and things started to shift. This big candle right here, that was tremendous. I mean, that was a big move down below the 21, right? We really hadn't done it except for back here. We really hadn't done that for a while on this pattern. We did it early on, right? Right down in here, but we really weren't bullish pattern yet. We hadn't really bounced up. We were stuck in this sideways pattern in here. So that breakthrough, I'm working off this old fib, right? We didn't get this one here. We didn't get above the fib line yet. So it was less of a concern. We got above this fib line. We've not closed below until here on April 4th, right? Was the first time we did that below the 21, okay? 8 and 21 was pinching down. They're getting closer together, which is showing us that we're running out of momentum as that's happening on our moving averages. And then on the 12th, we cross. The 8 crosses down through the 21. So now the green is on top, the 21, the 8 is in the middle at that point. And then on Friday of last week, we got our cross through of the 8 and the 55. So now the 8 is the lowest moving average. We're still not in a true bearish bias, which would mean 8 is on the bottom. That would be the pink, okay? The green would be above that, and then the brown, which is the 55, green is 21. The brown, the 55, would be above that. So you'd have all three, pink, green, brown. That would be a true bearish bias on the market, but we're not there. But we are bearish enough to take a directional trade, and we can take it, or should take it, consider taking it with an aggressive amount of contracts, whatever that means to you. For us, it's normally 4, right? 4 contracts, or 40% of the full amount you would normally put in. If you're doing, just to make math easy, if you're saying your normal investment is $10,000, only because I'm saying that number to make it easy, then you would put $4,000 at max in the trade, right? That's aggressive. If it's $1,000, then you'd put $400 at max into the trade. Well, I can't get a contract for $400 on Netflix. Good, then you don't trade Netflix. That's okay. But I would look at these more as aggressive right now because of where we're at. So, and once the 21 crosses down through the 55, we're golden. You go back to a full allotment there. So right now we're sitting right up at that 5,000. I got rid of the 100-point levels because we really don't need them from a Fibit standpoint. I put what Jim was talking about is the 5,000. I put that one back because I'm very stuck on 1,000-point levels. I think they are on something that trades in thousands. I think they're a psychological level, just like hundreds are for stocks. But here on the equities, the indexes, the 1,000 points. So to say, well, do we put 1,000 point on the Dow? Yeah, you can, absolutely. You know, 35, 38, $40,000 index, it's not going to have as much value, right? But $1,000 on a $5,000, yeah, that's going to make a difference. 5,000, 6,000, and the likes, right? So I need to back this up. Okay. So we broke through the moving averages, and we're sitting right here now. And you're noticing an uptrend line. We got to go all the way back here, and this was so this was my zone 1 in here, zone 2, zone 3, and then zone 4 of where stocks are trading. Okay, and all I did was number them down just so everybody could get a glimpse of what we're looking at. That you're not getting lost in the lines as you get a little bit further along. And excuse me, we are getting near a confluence of the new 618 and this diagonal trend line, which has a lot of strength, a lot of added power to it because of that confluence in there. Okay. So if we can get there and get a bounce, we've got some, I don't want to say concern, but you want to trade this wisely. You want to be focused on that. Go, okay, I see it. It's coming. I know it's going to happen or happening, right? I'm aware that those lines are there. And that's really what it comes down to, is making yourself aware. You know, one of the big themes this weekend in the inner circle training that we did was to change your awareness of what you see on a chart and how to look for other things and the first things you should be seeing when it happens, right? When a move happens or when your trade is setting up, what are the first things that you're focused on? And that's going to be very important as far as how much of what's happening to the left is important to you. How much, as we broke through the moving average on this day, did that even matter to you? Did you even realize that it had not happened in this pattern? Right. And I could tell you from, I'm not saying for everybody, but for many, the answer is no. They had no clue that that had even happened. Now, they saw the candle, but I'm not talking about seeing today, you know, if that was on that day. I'm not talking about seeing the day. I'm talking about looking at this overall pattern and realizing looking left, we haven't broken through, except here, which was below the fib inside of this channeling pattern that was going on between the 118 and the 0 line. All right. So let me bring us current. Scott said today's high on the S&P is only 39 cents away from the 5,000 level. So we pretty much hit that 5,000 level and hesitated. Exactly. Scott's in our inner circle as well. Yeah, so Jim said last time Tony had some different views. I have not heard when. I've not heard when he recorded the Traders Market Intelligence Report. Looking forward to the one for next week. Yep. So, like I said, we're reaching out to him today because I am away on Friday. Second kid is engaged. It's time my wife and I just go for a break now because we've been going crazy with all the plans for this thing happening. Trying to make sure that everything was lined up perfectly for them. So with flights and hotels and everything. So anyway, where are we looking at now? Well, the 618 has got to be the first place you're looking at for the downside. There's no ifs, ands, or buts. 49.23 half. That's what I'm looking at. And a big part of it is we've got the confluence. Now, if we drag our feet and it takes, 3, 4, 5 days, wherever that diagonal line is, that's going to be a support, whatever it is. It's not 49.23, maybe it's 49.50, 49.46, whatever number is, right? Wherever we come down and attack, that's it. If it breaks through and gets to the 618, we're looking for the bounce. That would be the upside down H pattern. Okay, we're going to talk about those in a few minutes, the H. From there, 48, 43, 74 is the next downside target. On the upside, you can tell we're just not having a good time around that 5,000. We just pushed up. If we go look at it, let's do this, Oh, let me put that over here. Right. This is an F-fib one. Let me grab the pop. Okay. All right, so there's today. You can see the dotted line for the 5,000. You can see that we just pushed up there recently. Just these are 5-minute candles on our mega charts just a few minutes ago. So from there, guys, this pullback, this failure has been expected. We made a high and then we had a low, which was a higher low than the previous day, right? We've put in a higher high now. We want to look for that higher low. particularly, I'd love it if we don't break that 48, 49.8796, right? Which is the fib line. If this is the case, right? If we can get, yeah, it doesn't stay. So if we can get above the 5,000 retest and bounce, I like it a lot. This is a 5-minute chart, Brenda. So if you look, you'll see the symbols in the upper left, guys, right? You'll see in the upper left center-ish, you'll see a time frame, right? You also see at the bottom, I have my charts numbered. So SPX is 5 minute. All right. We'll look at the monthly and the weekly and the daily in a sec, Jim. Good point. So 5 minute is showing, and this is what Scott was getting at. We reached up there, guys, and this has happened while we're in class. We reached up towards that 5,000. We can confirm that, yes, this is a hit on that 5,000 level with 30 some odd cents away, 20 cents away, whatever it is. So yes, as far as I'm concerned, we've got a hit. So 5,000, confluence at 50.52. And then I'd look at 51.32, which the 21 will be up there by the time we get up, right? Unless we just blow it all through it one day, might make a tremendous move. Eric, I'm glad you're able to make it. So, okay, so we're looking at a daily chart. So let's go look at a weekly chart now and see what's happening there. So the weekly chart is looking very, 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 very ugly, right? Very, hold on. Let's go back daily one more time. One more sec. If you are not watching 54.73, draw it on your chart on the S&P. Draw this on the chart. This is a midpoint. All right. So that 54.73 is the midpoint for 41.81 and 67.65. Okay. So go ahead and get that line on your chart. I've got all three of them on there. I think that they all have value to them. Okay. Let's see. Bigger. All right. So, and the reason I said it was because you're going to see it on the weekly chart. It's just above head there. You can see, well, it was. I just clicked on the chart and kind of lost it there. So right there. You can see that line up here. But from a weekly position, we're in a bullish neutral bias right now. But last week was bad. I mean, we're up 26 points this week. Last week we were down 156. Good hit. Very good hit. Right, $156. And then you look at monthly chart, and let me go back here. Let's go to the daily. This is a new fib, so I need to right-click on it, go to Edit Settings, and undo not settings, just edit. Undo show on all charts. Show SPX in all chart windows. Nope. Because I have a weekly and a monthly, so I don't want it showing up on there. So it's not on my weekly. Right, this is my only one. And not any longer on my monthly chart, okay? So on the weekly chart, we're showing definite weakness in there, but we're still bullish neutral. We go to a monthly chart, and on the monthly chart, we're still bullish. So the bigger picture is bullish, bigger, longer time frame. Does that mean that that's the one you're working off of? No, I don't have a monthly time view of anything right now. Right, nothing right now. Right, I can't see myself in anything for a month outside of some of my covered positions, my iron condors, diagonals, and the likes. Even diagonals are weekly, not monthly. But I can't see myself in positions very long term. I just can't. I struggle when we do power option plays with our swing trades of, are we getting a shift in direction? Are things messing with us? And la, 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 right? And don't get me wrong, we've got Roku. Okay, let's put this back. I didn't realize I was in the monthly. Okay, so this is our daily chart. Okay, there we go. So we've got a swing trade going on Roku right now. So great move to the downside. We've gotten 2 exits, I believe, on that one. And then W Day is another swing trade that we have right now. Woo! Loving the move, baby. Loving the move on it. We didn't get our next exit yet, but we're on our way. Actually, no, that's not true. Our next exit, I am fairly confident. Let me see. That our next exit is our final exit. And it is. We've already taken 2 exits. We're in W Day at 271. Right now it's at 251. So we got a $20 move in our direction and pop. We got out at 266 and a half at 258 and a quarter. And right now it's at 251 and a half, give or take ish. Yeah, it's been a great move, but I'm not a big fan of it. Yes, we do have earnings coming up, Jim, on Roku. We know that. And we've got to manage that position. So we're going to be out of it before the earnings. I'll talk about that tonight in pop. We'll be out of it before the earnings date. But we've been in it since 4/12. So we've been in for a little while yet, pre the concern of their earnings. All right, let me see what we got here. So Erica said Tesla earnings tomorrow. I wonder, would tech turn bullish? I'm a bear though. I don't know. I mean, Tesla has just what's going on? Okay. And that's I just saw your comment at the bottom there, Erica, about Tesla for your next comment. And her comment was Tesla got hammered. And yes, they have. They've gotten decimated from where they were. Right? They were up there at $315-ish or so, and they're down at 140. I mean, I'm glad I do not have a cardiologist appointment anytime soon, or else we would do no work on me at all, cardiology wise, as far as my tests checks would go. It would just be Tesla. That's all he talks about with me is Tesla. Tesla is this doctor's retirement plan. He owns thousands and thousands and thousands of shares that he has owned forever, from almost the inception of Tesla. So I know we've got to see. I mean, the stories that come out now about batteries and the cost of batteries, the weight of batteries, how bad they are on our roads, how our roads can't sustain. If every car was battery operated, it can't sustain it. But by 2025, 2030, I think it is now, 3035 maybe. In some states, you are not going to be allowed to have a gas vehicle. You're going to have battery. How? California can't even keep the lights on. You gotta shut your electricity down when your AC down in the summer when you need it the most, right? Not tell you to shut it in the winter, shut it down in the summer because it's overloading the grid. Go ahead and ask the electric company the thoughts on adding 1,000. Anybody that works for them, 1,000 electric vehicles, and like, no, we can't do it. We can't do it. The charging stations alone, the amount of current drawn for it. To say it's clean energy is not, because the current used to make electricity is coal in many cases, right? So goods, bads, indifference, indifferent in there. Tesla laid a bunch of people off. Barry said, yep. Yeah, Trips, I didn't see your comment on that. Trip said, but where does electricity exactly come from? Right? It's not things like the sky. Yeah, we have some solar and we have some wind and we have some water and things like that. But I don't know how things are around the rest of the country. I can tell you in the state of New York, at least I think it's the whole state, but I know for sure in some of the towns in upstate that I looked at buying property there, we were looking at property with water, and I wanted to be flowing water. And the reason for it was I wanted something that had a little bit of a rapid to it, not much, but something that flowed. So we were coming down on a mountain, and the reason for it is I wanted to put something in there for generating electricity. And I was like, yeah, I'm sorry, but that's illegal in New York. You can't use your own water to generate electric. What? What? Why not? Nope, can't do it. So they don't. Government really doesn't want you to make your own electricity. If Tesla announced the dividend, it could rock it, but that's about it. Yeah, and that's a good point. Kevin is the dividend, but there's just so much out there right now. You know, it's funny. Someone said another reason to leave, right? We'll certainly leave New York if that's what you were getting at. Yeah, no question, no question. I did see a story today about a mass exodus from Canada because they just raised, and I couldn't really ascertain if it was finalized or proposed, but it was capital gains, I guess, are 50% now, and they're talking about raising them to 67% capital gains. So who's leaving people with money? I got a good friend of mine in California. He said all of these people that have left California to go to Florida and other states in the US or other countries, the average person that left California made over $200,000. So you're not driving out the $20 person that you're paying for working at McDonald's. You're driving out your high income earners, which means you're driving out your income taxes. Why? Because California has massively higher taxes than New York does, right? We are in for a rude awakening as a nation of what's going to happen. Yeah, the people who can make money have mobility. Yep, exactly. Exactly. Yep, so you want to look at the S&P, Brenda, sure. So there's the drawing of the S&P right in there. Yeah, the exit tax PK, I don't know if it's legal to do or not do. You're going to pay a tax when you leave, and or there's talk of you're going to pay taxes for 10 years after you leave. It's like, wait, no, I'm not. Come and find me. Yeah, there's a lot. Yeah, there's a lot of solar out there. I get that, and wind. Getting the energy to the cars when it is needed is not a lack of energy. Yep. So there are actually businesses have formed now that people are showing up where you ran out of battery and they're charging your car right on the spot. Right. A great business model. That'd be $200, please. All right. So 4181 is the first one down here, Brenda. We've been talking about that one for 2+ years now, right? At that 4181. The next ones up are the brown line is the midline, right? The upper black line there is the next fib line, which is 67.65. The brown line is just the middle of it. That's all that is. It's the midpoint. Scott said a system that runs off of stored energy, EVs cannot compete with a system that produces energy combustion. Yeah, I mean, listen, it can't compete in distance, right? Can't compete in ease. Can't compete in I don't know what the right word is, but call me lazy. I don't want to wait, hours to charge my battery. If I want to drive 600 miles today and my car can only go 400, I don't want to have to wait to charge it. I just want to go. So, and again, I'm not against EVs at all. I think they are the wave of the future. I just think the cart before the horse type stuff is a big part of what's happening right now. So, all right, guys, I want to jump in because if I get this message, I'm going to need to go. So I want to get in there and look at, and we can continue to have this conversation, but I want to get in there and look at the, don't save, okay. And look at trading the H pattern. And I'm just trying to bring up another presentation, another PowerPoint, okay? So it's what I had called for the longest time the golden ratio retreat. It is the H pattern. Some of you may have my older DVD series that has that on there, the golden ratio retreat. I'm a big fan of this setup. There are some base rules I'm going to give you right now and ways of looking at this for the understanding of the tradability of it. So, and the H pattern, right? And it's not a capital H. I probably shouldn't have done that. It's a lowercase h, right? So I say it all the time, but if you look at a standard lowercase h, looks something like this, right? That's not really what this pattern looks like. It looks more like this, right? Oh, that's ugly H though, Rob. I'm going to tell you right now, that right there, that is the absolute prettiest letter in the alphabet as far as I'm concerned. Certainly is the most profitable one. Okay, so what is it and how do we deal with it? So you need to draw your fibs, just like you normally would. Draw the fibs from the swing high to the swing low of your pattern, right? So get your V top, get your V bottom, draw. Once you've got your fibs drawn in there, and it says step 1. Step 2, as the stock, this is critical, take a screenshot of this. As the stock bounces off the swing low, in this case, swing low, okay? So we made our move down. Stock bounces off the swing low right in here and moves up above the 50 percentile, but does not close above the 618, right, which is the golden ratio, hence the word or phrase golden ratio retreat, right? Look for a reversal move back down towards the 382, right? So, and the 382 is this line down here. So we get a 1, 2, what we're looking for is a 2 standard deviation move in our pattern, okay? And you notice it's not that, this is definitely worse than a kindergartner's lowercase h, right? Because that would be probably how a kindergartner would do it, the equivalent of how I write. And that would be more of what it looks like, or that is more of what it looks like in there, right? Well, you don't have this, it's not a straight down line. That's not what we're trying to accomplish here. It's not straight down, but it is coming down. And that's that line, this part of the line is this, from here to here. That's what that is. That's what the line is, right? This right in here, that's B. This is A, let's say. This is A. B is in here. And this is C as it rolls over. Right? That's the C component. It says, as a handwriting expert, thank you for the small h with the V before the curve. Okay. Exactly. So, all right, so this is step number 2. Number 3 is when the stock gets to the 382 level, this is the point to consider exiting or scaling out of the trade, right? So here is, and once again, if you look at this, you say, but Rob, this is just, I'm going to draw this and I'm going to follow along with you, Rob. And this kind of did this here and here and here. It did all of this in there, came up, and okay, that was okay. That part there where we had that roll over part, that was okay. But this was a flipping mess. I understand that. Charting is not perfect, meaning you will never, ever, ever see a perfect move on a chart. Here's my move down. Here's my move up, and there's the rollover right there. That's what we're looking for. That's exactly the pattern we want to see. Now, if we analyze this on a chart, look at the S&P 500. What has just happened? Well, let's zoom it in. So we got the line up right here. That's our move up. We're pulling back. And where are we headed to? Oh, we got below the 50. We didn't close below the 618. Could this be the H? Yes, it could. It could. Right? But I want to add a few caveats in there before we wrap up on this that I did not put on the documentation. So take notes or go back and start watching this from 12, 35, 40, wherever we started this segment, about 20, 25 minutes in. I'm sorry, 30, 35 minutes in, 40 minutes in, whatever it was. Start watching this segment again. And what we're looking for is, in an ideal world, I want to see the stock bounce off of the 618. I want to see this sucker get right down to it. I'm hoping to see this right there. And then my next day, we get a bounce. That's beautiful, right? I had said the 382, which is this line right here, which of course translates to this, okay? I said that was your target. All right. For me, forget the 100-point level for right now. For me, I would prefer to put target number 1 at my next fib line, which is the 500 in this case, and I would put target number 2 at the 382. And when I say at, it's really below, right? It's just below those levels. That is my preference with the way to take this trade. I do believe trying to capture more is not a bad thing if you know how to trade it. But then that would become target number 3, not target number 2. And I don't even mean this line. I don't know where it is. Okay, because here's what happens. Folks, if you remember nothing else from today, this is the key. Each Fibonacci level, I want you to consider it to be one standard deviation move. On a 2 standard deviation move, you have about 95, 96% of all data points are exhausted. So in other words, if we made our move down and now we get the snapback, the bounce, let's do it again so we don't have it messed up. As we get this pull down, if we come here and we get a bounce, 1, don't count the 100-point levels, 2, that 2 standard deviation move, that is most data points are within there, over 95% of the data points. And when I say 2, you will many cases get 2 and a little before it fails. So could you put target 1? Let's say you did 10x. You bought 10 contracts. Could you do target 1 and put 5x on target 1? Could you do target 2 and do 4x? Yes. And then could you put a trailing stop for target 3 for 1x? See, that's exactly how I would consider doing it if you felt you were going to have a run take place. That's how I would add my runner into this trade. Right? Keeping in mind on W day that we got in at 271 and it's now at 251, that $20 move is on the last 1 contract of the 4 contracts we did. We did 4, we got out of 2, we got out of 1. 75% of our trade is gone. We've got 1 left. That's our runner. That's our runner. H pattern, Brenda, ideally forms at the 618. Trip typed it in, guys. The 1 standard deviation is 68.27. 2 is 95.45, and 3 is 99.73%. Right? Now, if we go back and look, I'm just going to put my list back over here. If we go back historically and let's look at some charts. Okay, there's Adobe, right? Okay, so, and I said to you, the ideal scenario is it moves up above the 50 to the 618. If I find failure at the 50, like we have on Adobe, that is a consideration. Here's the move down. We made our move up, right? We failed. At the 382, I would not take that. We made this move up to the 50 and we failed. This was earnings, so I wouldn't be taking it. But if we fail on the 50 and it looks promising, like we're not getting back up, particularly if we're in an overall bearish pattern, then yes, I would consider off of the 50, right? AMD, we don't have a pattern there. Nothing on that. Keep going. This is Costco. My wife and I just had this conversation about Costco today. Not about the pattern, though. So move up. Makes its pullback. Now it closed below the 618. It came back in. We went 1 line. We'd be at a target number 1. We pushed up. We failed. We pushed up. We failed. We would have been stopped out. But it did make it to 2 and a little bit before it completely failed. So ultimately, it went 2 lines plus and failed on Costco. We go to CrowdStrike. Right? The gaps down in there make it a little bit tougher inside, but let's see. Google. Nope, went, yeah, okay. So Google, gap down, right here. Continued to push, bounced off of the 618. It went 1 line, 2 lines. This one went 3 and a little and failed. Tougher candle to take, but the pattern is there. That's part of the H. Goldman Sachs, nothing there. They've been a horrible candidate lately. Nothing there. And if anybody has a pattern, this, ooh. Woo! Come on, NVIDIA. Go, baby. Go, 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 go. Further down south. Keep going. Keep going. I'd like to take advantage of more NVIDIA. Not at this price, though. Right, so it's 382. Tesla, we don't have it there. So we're right now at the 50, right? This is tough with the big move that it's made down. I'd probably stay away from it, but we're at the 50. We could look at a 2-line move, right? W day. Nothing on W day. Erica said, I missed that Roku trade. Yeah, Erica, really? You? On Roku? Of all stocks? Yeah. Right, H pattern. Let's see, Stephanie. To Qualcomm. So I've got an older fib drawn on it. It's violated at this point. Guys, if Will is in here, Trip I know is, I know Scott is. All the rules we talked about why we're going to draw here and the likes, right? Well, actually, no, I'm not going to do that. So I'm going to draw here. I'm going to ask the question. And this is the type of stuff that we just did in a circle. I'm going to draw the fibs from here to here. Okay? So forgetting about everything that happened to the left, it doesn't exist. Forget about everything that happened to the right, it doesn't exist. Forgetting about indicators. Well, nothing down here, no moving averages, nothing. Look at the candle patterns. Look at the candles themselves. Do you notice anything from where I'm going to draw to where I'm going to finish? Do you notice anything inside of here that jumps out at you? Yeah, Trip, you cheated. Trip knows it. Scott knows it. Will knows it. Chip knows it. Stephanie, I think you're right on track. I just want to ask you about the words you used in a sec. I'm just going to give everybody else a chance to type in. Listen, if you don't know this, don't stress over it. All right? Once I tell it to you, yeah, I think that's what I think we're on the same page there, Stephanie. But then again, I'm not surprised. I know how well you trade. So, okay, PK, different. That's what I'm saying. We're not looking at moving averages, but yes, it did. It did hold as a support. All right, watch. Check this out. I'm going to ask it one more time. I drew this fib now inside of here. Do you see anything, once again, between those 2 points? Do you see anything between here and here? What, well, when I say do you see anything, you see plenty. Do you notice anything? Stephanie, is that what you meant by it? Yes? Okay, good. Good. Guys, do you see this pullback in here? This happens all the time where you'll get a move up, you get a V bottom, you get a move up, and you get a quick little wiggle, and then we get a move up again. All right, and then we get a V top. Well, look at where it's happening. Where is this in relation to the fib line? Right, Patty. Yep. Right, Brenda, it's at the half or the 50 percentile, which is the 50% pullback, right? But wait. Rob, we can't have a pullback. Why not? Well, it didn't run all the way, so how do you possibly have, I mean, until it ran all the way, how can you have a pullback? Well, what it does is this. We got the V bottom, we get this move up. This pullback is anticipation of the push higher. I'm not saying it happens all the time. What I'm telling you is go back and look at your charts that you've got fibs drawn on and go look at where you drew from and where you completed the fib line. So from here to here, go look at those lines and look at how many times the stock pulls back somewhere between the 382 and the 618 in the middle of that pattern. So we went from here to here, about halfway through here, we get this pullback and bounce. Right? How does it know it's going there? It's pulling back and then it takes off from there. Right? It is human emotion. It is your mind seeing it, but you not recognizing it. It is one of my favorite movies, sci-fi type movies ever, is a movie called Lucy. Right? Where this woman becomes a drug mule, not on purpose. They kidnapped her, cut her open, stuck drugs inside of her. They exploded in her stomach and she became this cyborg robot, crazy, how her mind grew, right? And when found a professor that talked about, we believe that you can use more than 10% of your mind. We just have to figure out how to unlock it and so forth. This is part of the unlocking process, right? This is, I believe your mind is seeing it, but not knowing what to do with it. You know it's there, you just don't know what to do with it. And I have figured out that it's there. I can see it without a doubt. And we went into the strategies on Saturday of what to do with the Friday, of what to do with that when you see that coming, when you see that happening. How and where do we draw our lines? Good, Stephanie. I'm glad you had them in the same place, right? So we did all of this, and then we're going to wrap up shortly, but we did all of this for the fact that we've pulled back, right? So there's our V bottom, there's our V top, we've got our pullback, and now we're looking for the bounce. So we're looking at 158.43. 163 is resistance 1. So we're going to be down below there somewhere for our target. So target 1, target 2. I don't normally put a runner on, but if you did, leave one contract on, whatever your number is, and we go from there. Back to the old 50. Yep, exactly. Exactly. Yeah, there we go. Jim, you are the man. So on May 2nd, 2022, 1897, in Power Hour, you went over the rules for redrawing the fibs. Jim's got it all, guys. He documents all of this stuff. I couldn't even guess what one we showed it in. We probably should start keeping those things down. But I appreciate the help there, Jim. So, all right, guys, listen, I am going to jet. I hope, was this helpful? Was going through this today helpful, not only for the H pattern, but understanding standard deviations, opportunities to trade it differently, and a little insight onto this 50 percentile pullback that hasn't happened yet. It really wasn't a pullback yet, but it really was. It was a pullback it lets you know where we expect the extension to go to next. All right. Happy trading, everyone. Have a great rest of your day. God bless. I will see you all at our next update, folks. Hey, Lee's got some links he dropped in there. Go ahead and click on those links. Get registered for Tony's class. I will see you all back at our next update. All right. Bye for now, everybody.